Legends, welcome to the Daily Buyer Show. It is the 25th of November. Well, it's the 24th, probably for anyone who's tuning in. Thanks for joining me. So let's have a look at what's going on in the world of crypto today. And we should just quickly start here. We're seeing a bit of a bounce in Bitcoin. If you've been keeping up with my X or previous streams, you'll know that I'm in the camp of this bounce being a counter trend rally in a macro bearish trend for Bitcoin. And until Bitcoin proves otherwise and starts giving us some bullish structure along with a better macro liquidity picture to support a sustained bid, I'm going to be staying in the camp of macro downtrend. I've called out quite a few times exactly what I need to see to turn bullish. And if I see what I need to see to turn bullish, I'll turn bullish with no hesitation. And I think that's what we all should be willing to do as traders or investors, depending on how you participate with markets. You should know what you need to see and change your bias if you see what you need to see. So let's just start here. I put out this, I put my weekly Substack full market update out yesterday. Be awesome if you could follow me on Substack. It's free. All of this stuff that I post is all free. And weekly, I put out my weekly market update and gives you the full breakdown of the crypto landscape, and it goes into Bitcoin key levels and all that kind of stuff. But what I wanted to highlight today is the short-term liquidity setup. So we do have short-term liquidity catalysts brewing. We've got rate cut probability into December. Now, the rate cuts have been very volatile. The trajectory of rate cuts have been very volatile over the past, well, specifically the past week, but even over the past couple of months. And typically the market doesn't like volatility in rate trajectory because capital likes to be a little bit more certain on where the price of money is going, because that's essentially what the rates are. It's the price of capital. How cheap can money be to borrow to be able to put into risk markets and chase gains? So when money is expensive, i.e. rates are high, it usually means we're in bear markets and big capital is retreating, or they're flocking. They're usually going into safer assets. They don't have as much risk appetite. But when they know that the rates are coming down and capital is going to become cheap, they're incentivized to take on money to grow, to deploy it into risk assets, for example, or to fund growth in their businesses, all that kind of stuff, right? Hence, when it's volatile, the market doesn't like volatility because it doesn't give a good trajectory or a clear path for where the rates are going. In the last week alone, we've gone from 40%, 30% a few days ago, back up to 70%. Now we're 81%. And you can see that Bitcoin is responding to that as well in its bounce. So this is the first catalyst. Now, the thing I continue to highlight in every stream, so we're never caught off guard with this sort of stuff, is we're still in a very high rate environment. So if you look at this dashboard I have here, which is showing Bitcoin, NDX, DEXI, and federal funds rate, not federal funds, net liquidity, basically, which net liquidity shows you the supply and flow of liquidity into markets. So when net liquidity is expanding, risk markets typically expand. You can see here, see how net liquidity is expanding. And that's where crypto had its last major cycle. When net liquidity declines, crypto goes into bear markets, right? So hence we track net liquidity, and it's another free indicator that I give to you guys. Just DM me on X. But if you just look at the federal fund rates, which is this dotted line over net liquidity, you can see in the last cycle, we're in a very low rate environment where the Fed cut aggressively, as well as QE to the moon during that COVID time. And that was the formula for this massive parabola. And rates were at pretty much zero, right? If you look here, rates were down almost at zero. Now, we've gone from a high rate environment to a slightly less high rate environment, okay? And even if we get another cut, it's gonna bring rates down to here. So it's not exactly that ultra low rate environment that we've seen in the past. Hence why it's not, for me, it's not a strong enough signal to suggest, based on how Bitcoin is currently trading, its current structures, it's not a strong enough signal to suggest that we'll have a sustained bid into a new parabola. However, if we get the Fed stepping in more aggressively with rates coming down, and they're going to drop rates significantly, or at least they provide a clear path to rates coming down progressively, but just heading in this direction, then that's where I believe we'll get more of a sustained net liquidity bid, along with, not net liquidity bid. We'll get a sustained net liquidity bid if that's coming down, along with the Fed ending QT, and especially if they start QE or do some type of stealth QE or something that basically expands the balance sheet, as well as the government stopping draining. They're basically just refilling their wallet. That's what will drive net liquidity up. So basically, with only one rate cut forecasted for this year, for the rest of this year, well, we've only got December left, then no other rate cut till, April. To me, it doesn't suggest a strong, at its current trajectory, it doesn't suggest a strong loosening stance that's going to drive massive liquidity into markets, okay? So we'll keep watching that, because if we come back to our liquidity cocktail, I call it, as long as the rate cut probability stays high into December, QT actually ends in December. So right now it's speculated to end in December. So if it actually ends, as well as the TGA starts draining, so as we've been discussing, the government has been refilling its wallet, but I called out yesterday that it seems to be around about this $1 trillion level, that when they when they hit this level, that's typically when they stop refilling their wallet. So if this is the case and it starts coming down this way, we will see net liquidity, this coming to net liquidity. It should move like this, and that would give us liquidity bid, okay? But again, I'm not sure how much sustained liquidity bids that's going to give us. So to me, all of these things are aligning for liquidity, but short-term liquidity. So this is the cocktail that's on watch, the liquidity cocktail that's on watch to fuel what I believe will be a massive counter trend rally, but not a full bull trend unless we're getting the sustained liquidity bid, right? So the more aggressive Fed, aggressive loosening Fed, along with Bitcoin structure turning over bullish, right? So I want it to rebuild daily, then weekly bullish structure. Now, I'll also point out that macro for me, and specifically looking at the macro liquidity, builds context, but first and foremost, price action leads, because the way that I look at things is I look at the macro picture to help guide me in terms of market context, especially for these bigger time frame trades and investments. And price action, however, is the key signal for me that will confirm or reject the macro, right? Because there's been times in the past where I've made the mistake of placing trades or taking positions based on what I'm seeing in the macro, but before price had confirmed it. And quite often that led me to either being too early to the trade, or my macro read was wrong and I ended up losing the trade anyway. And what I found was every time I respect price action first, I often ended up better, because price action confirms the macro, or it will sniff out what's happening in the macro and lead. Okay, so what I mean by that is quite often price action, for example, if net liquidity is going to turn up in a sustained way, quite often Bitcoin might lead and it'll build the bullish structure first, giving us our signals and triggers to be bullish, and then we'll get the net liquidity bid confirming. So hence I always side with price action first and foremost, but macro and liquidity, it all goes hand in hand. Okay, so it helps me build context. So on the macro picture, that's what we've got to consider and potentially be prepared for, because I believe over the next 2 weeks, we're entering a 3-week volatility window. So over the next 2 to 3 weeks, we've got end of month positioning flows. So this week, expect volatility. I'm not too eager to jump into this bounce just yet, because it could just be shorts taking profits into the end of the month, that sort of thing. So I expect volatility into the end of the month. Then next week, or first week of December, we have payrolls. Payrolls is very important because that is the main thing that the Fed is monitoring in order to decide what they do with rates. They don't seem to be too focused on inflation at the moment, and it seems to be all to do with the labor market. So hence payroll next week is going to drive volatility. It's going to be a key volatility driver. And if the labor payrolls is in NFP, if the labor data comes in weak, rate cut sentiment will change again. So rate cut probabilities will change again, more bullishly, and expect the market to respond in that manner as well. The following week, we've got the FOMC, which will be the last one for the year. That'll be, and then we've also got, leading into December, that speculation around QT ending. So hence, the next 3 weeks is likely going to be the decider of direction for December, Jan, potentially into Feb, March. Right? Because it's gonna give us these key signals or indications on the trajectory of this short-term liquidity. So that's what's on watch right now, and that's what we should all be monitoring at the moment and over the next couple of weeks. So let's do a quick scan of the macro charts, because we did have Wall Street open, well, last night for me. I believe it's still today, it's just closed. First day trade. Quick scan around the grounds. We'll just go to US 10-year, 2-year spread. Looking stable. Basically, we want to see this stable and increasing, okay, because that typically supports the risk bid. If it rolls over, it usually means there's some recession concerns or concerns of rates, tighter liquidity. Hence, I'll just quickly show you. If we look at how Bitcoin responds to this spread, right, you'll see here when this started rolling over, Bitcoin started rolling over with it. Even just throughout here, when the market was expecting looser Fed policy, you see Bitcoin starts to rally, right? So this is just something to keep an eye on. Right now, we're paused around here, but if we start to see it rolling over like this, it's not going to support the risk bid. Right now, it's okay, and we want to see it grind, even push higher if you want to be bullish. But I don't see any concerns or anything to note there. We're still monitoring this DEXY pattern, and it is still mirroring the cycle ending pattern of the previous two cycles. Again, I won't go through it because we've covered it so many times over the last couple of streams, so just watch back there. And we're still flirting with this daily breakout level, right? This structure high here. So again, if this rolls over, this will support a counter trend rally, but it won't be meaningful unless it builds daily structure down towards here. Okay, if it continues up here, then we're on very high alert for bear market. Now we'll cruise over to, we won't touch gold today because it's there's not really much to discuss there at the moment in terms of signals. These are some of the key charts we're tracking right now to give us a gauge on global markets. And we had a good bullish day yesterday. However, in my opinion, we're still not out of the danger. Okay, we've still got to observe some more price action to see what's happening here. Is this turning over, right? And that would be another confirmation signal on a bigger, broader bear market. So the DJI, yes, it had a green day, but we're still under this structure level and we're still under daily bands, which is beginning to separate bearish. SPX, a nicer bounce off here, pushing up into the bands. The bands are still red, so we want to see it reclaim the bands next and potentially put in a higher low. And then we're going to be on watch. Like, to me, we're not out of danger here until we actually break out now. Because if you look historically, when these sorts of tops start happening, you're not out of danger just because you bounce after testing these lows, right? You can see here, unless we get a really strong confirmed breakout or structure building from the breakout, you're on warning when this happens, right? So, for example, yeah, I mean, these were pretty quick corrections, but here's another one where you see when this is tested, right? Or even when we come down, we can't just be straight into breakout mode when we get back to these highs. So hence, I'm not jumping straight into bull mode, but as price develops, we'll continue to adjust our bias, right? So right now, this is flashing caution, but no sign to be bearish yet on the macro time frame. Because if we flick back out to the weekly, would you be bearish on this chart on the weekly just yet? I'd say no. Richard, the legend. Sorry, I just peeked over to the chat. Thanks for joining, legend. Hopefully we'll smash through stuff so you can get to bed. So weekly, would you be bearish on this chart? I wouldn't, not yet anyway. So let's just scroll back down and just keep flicking through so we can get to the fun crypto stuff. NDX, same story. Now the Russell, which is the main chart we want to keep an eye on right now as it relates to Bitcoin, it had a stronger push and close up here. So this is on watch, and let's just take a peek into futures. Oh, that's a red open for futures, but red, but mostly flat, right? So what we want to obviously see is continued bullish structure develop, because that would support the potential counter trend rally. I mean, sure, there might be a rotational flow. If this is just turning over like this, could still get that rotational flow. But I guess the main thing I still want to keep a hold on is this cycle ending pattern of the NDX, right? Where it keeps going higher for 280 days. Because if it rolls over sooner, right now it's forecasted till about end of March, which lines up with short-term liquidity catalysts, which lines up with so much other stuff. So if it rolls over quicker, which is the main thing we're watching, then this is just, I don't see how we have a massive counter trend rally or anything meaningful. It means Bitcoin may roll over with it, just going by history. But yep, so NQ still on watch. We're finding resistance into the red bands now, which is what I said we need to keep an eye on, because once those bands flip, you see where you push into the bands, they become resistance. So the next bullish, the next, call it step in being more bullish on this chart would be to clear the bands and find support into them, okay? Because the longer we're below the bands, the more momentum increases to the side that the bands are favoring. So for example, if we just reject off these bands here, these bands are going to get thicker, and momentum, it means price momentum's building to the downside. All right, cool. That's macro markets. Those are the key indices in the macro markets. Last thing to just take a quick peek at is the Nvidia. So remember, the most important signal that we're watching on Nvidia right now is for a Nvidia SPX bearish divergence, where Nvidia diverges bearishly against the SPX, because historically that has been a signal of coming weakness, where Nvidia starts giving the bearish divergence while SPX is pushing higher, and it usually means that it's giving a early signal on weakness to come in the SPX. So right now, no divergence. They're both moving in sync. They're both topped at the same time. So far, not seeing that concern signal. But we are still tracking Nvidia, which is now sweeping its structure low. Similar story to the indices. Jumping over into crypto, we'll start with our favorite chart of the day. Okay, we'll take a peek at stable dominance. I covered this extensively in the last two streams on what we need to be looking at and monitoring on this chart. And right now we're at this breakout level. So far we're seeing a pause. Right now, to support a counter trend rally, what we should see is something like this. Maybe it goes a bit higher first, but it'll come down, right? Just like you see here. Now, what I've got marked out is, at the moment, I've got this trend down the bottom here. So if we get some type of massive counter trend rally, I'm going to be very cautious as we get down to these trends. If we get down to them, the main thing I'm going to be watching is these weekly bands. So as price stalls up here, the bands will start catching up. So the bands will start to do this, right? And if price starts turning over, the bands will start to do this sort of thing. And I want to watch that interaction with the bands, because essentially we want to be below the bands and trending further down to suggest that this pattern may be reversing. But I'm still going to be on major watch if we end up getting down somewhere here into these areas. But if we're getting right down to there, that would be a massive rally. Massive rally. Okay, so we'll analyze things as we go. The main thing we're observing is this counter. This was when the counter trend rally happened in 2022. Okay, so are we going to see similar price signatures to tell us it's a counter trend rally and to give us kind of like a lead on whether to be bullish or bearish and all of that stuff? Where did I hide my charts? Okay, that one. Bitcoin. I've loaded up these 4 screens, but maybe what we'll do is we'll just jump straight into a clean Bitcoin chart. Or when I say clean, I mean these are our key high time frame levels that we've been tracking. Right now, we're seeing a decent, call it a decent bounce. We had the inside bar here. Now we've had some bullish price action out of it. Now I called out what I'm looking for in a pivot. I've been calling it out over the past few streams. I want to see weekly and daily structure base and build down here to give me more confidence in a macro bottom. And this is more so from macro positioning now, right? So my strategy at the current phase of the market, I've already, from my macro positions, my spot Bitcoin, my spot ETH, my spot Sol, I'm already out of the market for everything except for my forever Bitcoin bag. Okay, and I sold it all through here. I sold my Sol, I sold my Sol and ETH kind of way back. Obviously didn't get the best prices. You never time the tops and the bottoms perfectly, but I'm very happy with how I got in and out of those trades. And I am in, of my total allocation to crypto, I'm down to about maybe 10 or 15%. I got to check actually of my forever Bitcoin. And now I'm just sitting in cash. I've got no interest in buying any spot until I have good confirmation on a macro bullish trend coming back in and macro bullish structure. To me, everything's pointing in the direction of some type of bear market. So that's where I'm now sitting on my hands and waiting for the right signals and triggers to load up on spot Bitcoin again. But whether that's in a month, 3 months, 6 months, 12 months, I don't know. I don't care. I just know what I need to see in the charts. And as long as you're with me here on the streams, I'll call it out with you guys. But where that leaves me is I'm still more than happy to trade the cycle from here, and I'm net short, meaning I'm looking for my bigger positions that I'm looking for right now are for those macro swing shorts. So I'm going to be watching how price responds into a lot of these key levels. We got the yearly open that's right now sitting with these daily bands, right? We've got these, this is a big level for me, October lows, the Q3 lows. If I scroll back out onto the weekly, all right, I'll show you why these are some big levels I'm interested in. Because the bands are going to keep expanding like this, right, until we eventually run into them, which is probably going to be around here, right? At the same time, we've created this weekly order flow to the downside, this fair value gap, and this was the last buy side fair value gap. So you can see how pretty much from this region to this region is the area that I'm going to start being interested in the macro short. Now, the way that I position for these bigger macro positions, I have my own strategies and systems for accumulation and distribution. But think of it kind of like this. If we flip this chart and we were moving from bull market to bear market, I'm going to show you something. Let me turn these off for a minute. All right. When I look at accumulation and distribution, I use my systems and my tools to tell me times and phases to be in versus be out. And let's just pretend this was cool. We've gone through this massive bear market. Now here is because we're on the weekly, I've had my first major trigger to start building a position. So would I start building straight up here? No, because I'm waiting for this weekly pullback, right? But this is now phase one for me, where I'm looking at these areas where I know price is probably going to come into the bands. I'm looking at our most recent weekly. I'm looking at where order flow shifted, right? And this becomes my, if we're in a bullish market, right, we're heading into a bull market, this becomes my accumulation zone where I start building my position, right? Now, how I do that, I've got my own, like I said, I've got my own systems and strategies of what I'm looking for when I come into this area. So I start building my position, and then in the next phase, right, I'll be watching how price creates the next low to build my, to kind of round out my position. And then that's where, if I haven't built if I'm not happy with how I built my position there, or I wanted more entries, I may add to it. And then I've got my targets for where I think this thing could go, right? But that's just a very loose, quick example of how I look to position into these bigger macro swing trades, right? Now, if I did that on a flipped chart, almost so I can show you, if we come back to here, right? This is how I did the exact same thing at the start of this cycle, right? We came into here. Now, I didn't buy any of this, okay? So this is my, I call this somewhat of the early risk takers. So this is your highest reward area, but for me, this is your highest risk area, okay? I waited until we got this market structure flipped, and then the bands turned weekly, and then this was my first accumulation. I was looking at this new gap that we created, okay, and then I was also looking at these gaps that we flipped, and then I was watching these weekly pullbacks, and I accumulated all of my positions through here and here, okay, and I started distributing at 100k. Right, as soon as we hit 100k, which I believe we hit it somewhere here for the first time, as soon as we hit 100k, I started distributing my positions, and I started executing my distribution strategy, which is different again. But do you see how what I'm pointing out here is exactly the kind of thing I'm looking to do here as well, right? And that's why I flipped the chart, so you can see it there. And if I flip the chart, it's the same thing, right? I'm just going to do it again in the inverse. Now, the main difference between trading a bull market versus potentially a bear market is you've always got capped downside on the bear market. Like the price can only ever drop 100%, right? Like it can't go below zero. So you do have somewhat of this capped downside, where sure, it's not unlimited upside if you're being realistic, like it's not unlimited upside, like the price is going to stop somewhere, but you don't have that fixed cap on where it can stop and when it will stop, right? So historically, what do? I look at key big market structure levels, and the big area I'm looking at right now is I'm watching as a bear market target, where I'll start becoming more interested, is I'm pretty much watching this area here, right? Because this was that major breakout consolidation. Like this was our biggest consolidation of the entire bull market, right? And so for me, when I see that, that makes me believe that we built such a good acceptance of price in this area and such a good base there, that I believe that even with historical context, if you look at back here, right? You look at that area when we came into it. So this is where I believe that we, well, I don't know if this is going to be it, right? Like, fuck, who knows? We could just crash all the way down. But this is where I believe, or this is where I will be more interested in spot positioning. Now, when, how, whatever, when we get down there, what it looks like when we get down there, we'll discuss it as we see it, if we get down there. But basically, that's my high time frame area that I'm watching if we're into this full blown bear market, right? So what are we seeing right now? We've got an inside bar developing. All right, I'll turn all these back on. So I've got a lot of this sort of marked up. Yeah, so we're in, I kind of mentioned this yesterday, we're in no man's land for price, meaning that when price usually moves, I like to think in this concept of making liquidity or taking liquidity. And I want to be trading when price is taking liquidity, and I want to be stepping back when price is making liquidity. And what I mean by that is I just look at where price pauses, and I look left basically, and I see, has it taken liquidity, right? And when I look on the daily and the weekly here, no, the next key liquidity pool for the weekly is down here, right? We already took this liquidity, gave us nothing, so we've got a strong bearish trend. Okay, on the daily, this isn't a very significant liquidity pool here for me. It didn't really create a very significant pivot point. So yeah, I just don't see it as a stronger key low where liquidity was taken. So that's why right now, I think we in a phase of potentially making liquidity, unless this is going to V-bottom and just shoot straight up, right? And if it does that, I'd be more hesitant to be bullish on any price action, because I'd be thinking it has to come back down and potentially take the low, right, to create a new lower high. But my thinking right now is this is no man's land and we're in make liquidity phase. And what would it look like to move to take liquidity phase? Well, it would look something like this, where we make liquidity, market starts getting bullish. Maybe we come into these daily bands, right? And we hit the yearly open, and then that could be the area we come back down and we take liquidity, right? Then when we take this liquidity, I'll be observing price behavior down here. If we get an SFP, or if we're getting a weak low and then an instant nice reaction, and then price is bullish from there. Because now we've moved from making liquidity to taking liquidity and we're having a good reaction, that's where I'm more interested to get involved on a, call it the bigger counter trend positioning side. All right, so that also means that, again, being net short, I'm less hesitant to jump into shorts. So I'm more hesitant to jump into longs, considering the structure and my bias, and I'm less hesitant to jump into shorts. And like I've mentioned in the past, I'm not going to go through low time frame stuff, because that's what I'm not really trying to do on these streams. I'm trying to guide your macro understanding of the market, so you can make your own decisions. But what I'm looking at from the more macro short positions, I already explained to you that big macro short area that I'm looking for, which is pretty much from the yearly open up into this area here. But on the near side, I will more eagerly jump into shorts if I see the right triggers coming into the daily bands here. If we get some type of signals coming into this yearly open, and I might just be trading, level to level. Potentially we get pull back into here, take out half of this move before we move up again. Potentially there's another trigger there. But yeah, basically because my bias is net short, I'm less hesitant to jump into shorts, but there's more that I need to see to jump into longs, right? Now, let's head over to altcoin land. So you know what I'm looking for in Bitcoin. Now, I do believe alts are going to rip and outperform on this counter trend rallies, but we've got to be picking the right alts. So what I'll do is I'll just jump on this top 100 and who's this stupid bot in the comments? I'll remove that. It got me excited. I thought we were going to crack four viewers today. We've got 4 at the moment, so thank you, legends, for joining me. I thought we might get 5, but it turns out to be a bot. So, altcoins. Now, if you don't already have my token rotation indicator, shoot me a DM on X. I'm not that advanced yet, Rich. I'll have to work out how to do all that stuff afterwards. But yeah, I'll definitely need to block them, hey. So, Rich would be familiar with this, the token rotation indicator. Now, if you're not familiar with it, this is an indicator that I built that allows you to easily see whether any asset that you load up is outperforming over time periods or underperforming the majors. Your goal in crypto, if you're touching any altcoins outside of Bitcoin, and especially outside of the majors, you need to outperform them. Otherwise, there's no point touching them. But the most important thing that you need to understand when you're playing with alts is they are very rotational. So you need to have a system or a tool that allows you to understand when capital's flowing in and when capital's flowing out, so you can get in at the right time and, most importantly, get out at the right time, because you don't want to get stuck bag holding these things. Because unlike Bitcoin, where even throughout a cycle it might only correct 5%, 10%, 15, 20, 30, altcoins will go 80, 90% and sometimes not even come back throughout the whole cycle. So you need to have a tool that helps you get in and get out at the right times, and that's why I built this indicator. So you can really quickly and easily flick through charts. Here's an example, TON. Why would you touch this thing right now? You can see that this indicator is showing you there is no time frame in the last year where if you bought this and you were still holding it, that you're outperforming Bitcoin, ETH, or Sol, right? So anytime in the last year, if you bought this, you're underperforming the majors. There's no reason for you to be holding this thing, right? So this is exactly what it shows you. And what we're specifically looking for is we're observing the 1 day to 1 month time frame, because when these start consistently lighting up green, for example, it's showing you rotational flows into that asset. And when, let's say this whole thing was green, when it starts lighting up red from 1 day to 1 month, that's showing you rotation is moving out of that asset. Okay, so you can see how this is such a powerful tool to guide you when it comes to playing with altcoins. So what we can do now is, where's the legend Rich? Rich, if you've got any tokens that you want me to specifically look at, just fire them off in the chat. But otherwise, I'll just go right here. We'll start in the top 100 and we can just start flicking through charts. And my focus here isn't to give you coins to trade. That's not what I'm here to do. I'm here to give you the tools and just show you how I do it, and in the hopes that it helps you, essentially it helps you do it better and make more money and not get stuck bag holding. So this tool is like a torch in the dark. Picture you're walking around in the dark and now you've got a torch to tell you if you should inspect something further. First and foremost, only ever use it on the daily time frames. It's not useful on any other time frame, just in the way that it works. And secondly, it doesn't replace technical analysis. It just guides you on whether you should bother interacting with that asset or not. So for example, right now I look at TON and I go, why would I touch this? I've got no reason to touch it. Jasmy, it's had no rotational flows in the last year, and there's something, but there's nothing exciting coming through. Bitcoin Cash. So here's a good one, right? Where I don't mean good in the sense of it being a bullish asset per se, but in the sense of when you look at these rotational flows, it's showing you that if you bought this token anytime pretty much within the last year, you were still holding it, you're still better off in this token versus Bitcoin, ETH, or Sol. It's outperformed, right? So right now, what I'm observing is that we've got some red coming through. So I'd keep this on the watch list, but I'd still be interested in looking at some technical analysis here and potentially looking for setups, because we can see it's had some flow. It's not of concern yet because this could just be a pullback that's occurring. But if this was to now start going red for 7, 14, and then 1 month, I'd be a lot more concerned, and I'd be thinking, all right, it's rotation is happening outside of it. But this is where you might be, if you were interested in Bitcoin Cash, now you might, is that what it is? Bitcoin Cash, BCH. Useless, yep, we'll check useless in a minute. We'll do that next then. Thank you, Chloe. That's a new name. Thanks for joining us, Chloe. So we'll check useless next. And right now, you could be looking at this Bitcoin BCH, and you could be looking for your setup, and you just need to keep this on monitor, because if it keeps flashing through red, then you got to realize that flows might be leaving the asset. Okay, let's go to useless. It's not looking great. Personally, I wouldn't be touching this right now, because I'm just not seeing any consistent flows come here. 3 days ago, it had a pump where it outperformed, but it's not really maintaining any of that strength right now. So if you were keen on useless and you think there's something upcoming for it, I'd be marking out my charts, seeing if your setups are potentially coming in. And for me personally, I'm waiting for at least 7 to 14 days to be lighting up consistently green, along with my setup hitting. So depending on what kind of way that you trade and what systems that you use, for example, if I was just looking at this, the daily structure is still bearish, right? Like you've got this bearish trend here. Okay, so if we just start on the daily structure, and let me just make that a bit thicker, and I'll color it yellow. So we know this is your trend. So we know that for this to even be bullish, we need to get above this daily high. Okay, so if price did this, okay, then created another high, you know that it's building bullish structure. Now, once it's building bullish structure like this, the next thing I'm looking at is, are we maintaining above the bands and finding support? Because that means these bands are going to turn, and they're going to cross like this, which means they will turn green. Okay. And then if we're maintaining them as support, you'll find that price is looking, and that at the same time, if while we're doing that, we're getting rotational flow where you're seeing that useless is outperforming all these low time frames, right up to 14 days, 1 month is outperforming. Okay, then you know you're trading with rotational flow, meaning capital is rotating in your favor into the asset, as well as with a good technical setup. Does that cover it, Chloe? So that's useless. Talk about useless. Tia, what a horrible chart. Bert's a good one. No worries, Chloe. So Bert's a good one because you can see here how it rotates, right? You can easily see here that 10 months ago, it had a good, what's that? 1, 2, 3, 4 to 5 months of rotational flows. So this is the perfect depiction of how these seasons and cycles occur for these assets, right? So 10 months ago would have been February, right? Would have been February. So you can see here Is that right? February? Would have been January because we're in the 11th month of the year. So it would have been around February, yeah. So you can see here around February where it was basing. See how it's basing? And around February, it would have started showing you right up until February, March. As you were leading into March, from 1 day to 1 month, you would have seen this rotational gauge be showing you green lighting up. At the same time, it's basing. And Chloe, that setup that I just showed you in useless, that's right here. You can see it. Daily structure looks like this, right? This is the exact same setup I just pointed out to you in useless. Daily structure looks like this. And at this time in February, this would have all been red, most likely. And you would have seen the structure shift here. And see how when it shifted structure, it took out the bands and it was finding support into the bands. The bands cross green and it continues to find support in the bands, right? You've got this rounding bottom coming out of this base, right? And at the same time, during that time, these from 1 day to 1 month would have been lighting up green. You've got all your triggers there where you've got, cool, technicals, you're on the right side of the V because you're trading with structure and momentum, and you're on the right side of capital flows, showing you rotation is occurring into the asset. So right now for BERT, I'm looking here and I'm going, okay, it's good that first and foremost versus a TIA or anything else that hasn't had any rotational flows in the last year. Like if you flick to TIA, no rotational flows in the last year. So what makes you think it's going to catch rotational flows? When I flick to BERT, I look at this and I go, cool, it's rotating and it's moving just as tokens and the market does. And this shows me that, at least because it had this rotation here, there is some type of community or there's some type of interest here, right? So again, I'd just be observing. And first and foremost, I'd be observing structure. Now it's consolidating, right? So that means the challenge faced with this chart right now is the daily high is not till up here. So this could trade all the way up to here and still be bearish. And when it does this, you probably have the entire, whoever's interested in this, piling in, getting uber bullish up here, when really the structure highs up here, because this is our low. This is an internal high. It hasn't created a low yet. This is the last high that created this low. So this is our structure. Okay, so hence that would be my caution when I look at this chart. And what this kind of setup I'd like to see is the same setup that I just showed you guys, where, so if this is our current low, this is our current high, I want to see this low taken out. Okay, because what does that then do for us? If that low gets taken out, it means that our structure high is here. And now look where our bands are. So as that low gets taken out, if we now see same setup here, maybe it comes up and then takes the low, whatever. However, as soon as this low gets taken out, all we have to do is look for the highest point between this low and this low. That'll be our structure high that we mark out, right? And then if we start seeing rotational flows as price is doing this, as it gets above these bands, right? Then it turns over structure, comes back, the bands start providing support. We get that rounding bottom, rotational flows coming through, and that's our setup to go long on this thing. Flick through, let's see what else we can find. Dot. Again, what an ugly chart. It's barely come out of the bear market, right? Like, and this is the case for many alts. So, you know, I feel bad for many people who have lost money on this stuff and not adapted to the dynamics of how seasons work and how to play with alts. Atom, it hasn't had a bull market, right? Like this is just being like this is why, again, you don't even, I mean, the chart looks bad enough as it is. But again, using this indicator, you'd look at this, and if someone's trying to shill you this thing, all you need to do is go, yeah, cool. I'll wait till I'll wait till the flows show there's money actually coming into it, right? Like I've been shilled different tokens. I was shilled one not too long ago. I actually think is a really good token. It's on my watch list, but my response is always the same. It's like, great, I'll look at the token rotation indicator and I'll be interested when I start seeing some flows come through. Not see how you can easily, like, I don't even really need to look at the chart. Like nothing's, oh, all right, there you go, Tron. So we've finally seen some green, which implies some strength. And it is just a pretty gradual uptrend like this. Now Tron, I don't know, it just doesn't tickle my fancy as an asset to play with in general. But if you were someone who was interested in Tron, you can see that it's had rotational flows pretty much for the whole year. It's been outperforming. Yes, it's having some sort of pullback, but if you've got a technical setup, and it might just be that same one I just pointed out to you guys, and you start seeing the flows coming through, well, that might be something you're interested in. Injective, no interest. Render, no interest. Beam, nope, no thanks. Yeah, the crazy part is, you know, a lot of these tokens are the tokens that are just so heavily shielded, and it looks, you know, I guess if you just shorted these things every time someone shilled you it in the last year, you would be making so much money. Like, look at these things. All right, let's do something, right? This is getting depressing, just looking at all these tokens that are going so low that they might not even appear on the screen anymore. XMR, I like this one. Looks parabolic to me, like in the way that it's been moving. Now, considering the market context, I'd be cautious that we're coming into a peak sometime soon. But just looking at this, looking at rotational flows, it hasn't really lost any strength throughout the whole last year. I'd expect this to be one of those charts where if Bitcoin has a massive counter trend rally, well, this is probably going to keep going parabolic too. Now, where to? That's always the big question, right? Like, how do you navigate price discovery? We've been on here for almost an hour, but I'll show you just one way that I navigate price discovery. And I take major consolidations and I use a fib, right? So if we take this one, for example, top to bottom, price discovery, right? Now, these are my guidance levels. Usually I'm most interested, like if I jump onto charts, and I'll show you this in a moment, this 1.68 is a very key level that always tends to get tagged in a price discovery. But here's what I do, right? So this was our high. I'm going to show you, for example, actually. Let's go select bar. So let's pretend we're back here, right? At this point in time, I'd be going, all right, cool. I think this is going to go parabolic or into all-time highs. So I put this up. Then the next thing that I do is I take from the high to the 1 and I mark out the mid-range. Okay, and this is what guides me in price discovery. And then I do the same here. All right, so now I'll just press play. Look at that. Look where it tagged, right on that mid. Okay, so there's just one quick tip that you guys can use for navigating price discovery. But essentially, if we go back to what we're doing on identifying rotations, now that to me looks like something, and it is something actually I'm interested in getting involved with for a counter trend rally for Bitcoin. XRP, good rotational strength pretty much for the whole year. So this is, I won't go into technical setups again. I gave you guys that that setup you can use. So you could just apply that, or whatever system or strategy that you use. The whole point is now you've got a tool to guide you on rotational flows so that you have another key thing in your favor when you go to potentially take some of these trades. Sui hasn't been looking great pretty much for the whole last year. We're seeing some flows coming through, and it is an asset that still does have some type of call it community or attention. Like, it still does have some mind share, but again, like I'd want to see more of that rotation coming through, at least to 14 days, right, to give us the lead on flows coming into it. I know these are all majors. Okay, ZEC. Oh, hold on. What's HNT there? I don't even know what HNT is. But you can see here, for the past 3 months, it's had rotational flows, meaning it's been outperforming. Now, this is here we go. This is a very good point that I'll call out. You can still outperform to the downside. Okay, it just means you're making less, you're losing less money than if you're in these things. So just remember that if everything's going down, but this rotation indicator is still green, it's still, it doesn't mean that you're making money or price is going up. It just means that you're outperforming, but to the down, in a downside move. So it just means this asset is going down less than Bitcoin in this example, right? But this is, again, this doesn't take anything away from the fact that this is showing you something that is this potentially, if it's already outperforming to the downside, when usually alts underperform to the down. That's really confusing. I just realized what I'm saying there. So if to the downside, it's having less drawdown than the majors, that is a pretty big outlier for altcoins, because they usually always get smashed to the downside compared to the majors and compared to Bitcoin. When Bitcoin's down 10%, an alt will usually be down at least 20 to 30, right? So this in and of itself, if you are aligned to think there's a counter trend rally, then this is a signal of rotational flows coming into this, and you might be interested with the setup here. Helium. Oh yeah, I've heard of that actually. Helium. Yeah. Okay, I think it's a Sol token, isn't it? Something on Sol. So, like if we were looking at our setup here, we can see this compression happening. We can see it potentially base building. Right, so let's just go back out onto the weekly for a minute. We've had a weekly sweep, right? So that means that it brings the weekly high here. What's the highest point between these two lows? The weekly high is here. So if this gets above here, right, the weekly's bullish. At the same time, the daily... Okay, the daily and the weekly align right now, because that's the last daily low, right? That was the high that created that low. Now this is the high. So this is basically your daily and your weekly range. So your structure range, I should say. So if price doesn't take out, or if it takes out the low again, creates a new low, and it's compressing, right? And it gets above, right? If you traded this, you probably got a cleaner signal on the weekly for this, right? If you were monitoring the weekly on this, at this point in time, you just need to get above here to be bullish on this thing. So again, if we just using that same system that I showed you, bands, cross over the bands, find support into the bands turn green. This is already showing you that setup where you've got the rotational flows already coming in. So this could be one on the watch list. I'll flag it for me. Flag that blue. The last thing we'll do here is maybe we'll just take a look at ZEC and then we'll call it a sesh. So remember to use this only on the daily. Yeah. So, well, ZEC has been parabolic since September. And I am monitoring potential distribution signals. So that setup I just showed you, if you invert it, if I invert the ZEC chart, right, it's pretty much the same thing. That's where the daily, if this was bearish, that's where the daily high was. Sorry, that's not the daily high. That's the problem with this, is the daily high is up here. So what I'm looking at ZEC at the moment is, if we do get another test of this is the all-time high, and I've got this chart inverted just because you can see the same setup that I showed you guys on those other charts. It's the same thing if you just invert the chart if you're looking to short, right? So here, if we take out these lows and we do a weak move into this high, then as soon as this crosses over here, this is confirmed bearish on the daily. And again, if you got the bands, come back into the bands as support, then that's your short. So you can see how we're doing the exact same thing. It's just inverted, right? And you see how it will look like a distribution. Now, just have a look at that and have a look at Bitcoin. Look here. Is that not that? Right? So, cool. But as of right now, as it stands, ZEC is still bullish, right? We are seeing some type of exhaustion through here. It's a range, but we're yet to know if this range is going to break down or if it's going to end up being a supply range, meaning a breakdown to the downside, a distribution, or if it's going to end up being a demand range and potentially pushes higher. Given the context of where we're at with Bitcoin and the liquidity bid, if Bitcoin counter trend rallies, dependent on how hard it rallies, I think depends on how high this goes. However, if Bitcoin rallies hard and the rest of the market's rallying hard and this thing is struggling and it only just makes a weak high, that's going to be a big signal for me to get heavily short on this thing. Oh, nice. Yeah. Well, narrative, essentially with all of these tokens and these coins, it really just comes down to pumpermentals. And what I kind of think pumpermentals are is, has it got a narrative and has it got mindshare and attention? And usually a lot of these tokens will only have one of those hype cycles throughout the bull market. And if they're lucky, or if they are actually a better token, then they might have multiple hype cycles. But that's why if there is some type of narrative for it, again, my strategy is always to let price lead. We've got all the tools that we need to catch the actions, what's actually happening. And if there happens to be a narrative or something else, then that's just fuel on the fire, and price action will usually tell us what we need to know anyway. So yeah, that'd be good to keep an eye on, Rich. And along with, I've flagged it here, we know what to look for in a potential setup too. Legends, that's it, unless you guys want me to have a look at any other chart. Otherwise we'll call it a session there. What's the old Bitcoin doing right now? You also can use this rotation indicator on indices as well, right? Because it's the same concept. And like, this is where you look at this and you go, oh, I should have just rotated into the Dow, or I should have just rotated into the S&P anytime in the last year, right? Because the S&P is pretty much outperforming everything. Anyway, we'll call it there, legends. Thank you for joining me. And I'm here daily at the Bitcoin close. Maybe we'll shift the time. I might give it a week or two, and then we'll try a different time, Rich, because I know you're over there in the UK, and for people in the UK, I think it's like midnight or later. So see how we go. Enjoy, legends. Have a good week. See you tomorrow if you join me again. Oh yeah, don't forget to like, subscribe, and all of that kind of stuff. See ya.